Okay, thank you very much, and thanks again to NinjaTrader for sponsoring today's webinar. So one of the great things that they're able to do for us is to sponsor our time in the Omnovia room here so that we can get together and talk about ways that we can improve our trading and share various bits and pieces of information. Wanted to tell you first a little bit about Auto Trade Signal and some of the stuff that we're doing. We began really as signal processing people, speech and noise and signal processing, filtering when you're in a room full of people talking at the same time. How can you pick out one voice when everything else is other voices around you, so that it's basically one thing from another. And after we've done that, we realized that a lot of the same techniques are actually applied in the financial markets. And so we started basically trying to apply what we've learned about signal processing in the real world to financial markets and to try and pull out the real price moves from just the up and down movements of the market. And it's turned out very well for us. We've been trading this on our own in our own accounts, and it's been successful for us, and we're happy to share that with other people. And all right, is that a little bit better? Let me turn down the microphone just a little bit. There we go. That should be a little bit better. Let me know if it improves the sound quality for us. One of the things that we've done is we've gone about trying to make a number of software tools. So let's just kind of get a 25,000 foot overview of our approach to the markets, because there are a lot of different kinds of trading that you can do. Some people trade only during the day. Some people trade for long term. In other words, they may try to trade and hold positions over many months and hope that the price goes up. We've actually developed tools that trade in a lot of different markets that we have. We have built long-term trading tools that you can use for your retirement accounts and things like this. We have developed tools where you can use for trading equities, trading stocks. And here you may hold a particular trade for a week or a couple of months. All right, let's see here. Okay, Joe, that should be a little bit better. And so our tools, our software tools for trading, cover a variety of time frames, and we're going to look at all of them today. We're going to look at things that you can do for your long-term trading to maximize your retirement fund. We've been doing this for several years now and have, since 2004, not yet had a year where we haven't beat the S&P 500, which is a pretty good deal whenever you're comparing probabilities and things like that. Most mutual funds, about 80% of them, struggle to equal the S&P 500. So we've been pretty successful there so far. And we'll talk about trading stocks and where I believe this one particular tool that we have is going to be probably the most potential for really large long-term gains. This is the stock trader, and then also our auto traders that day trade the S&P 500 E-mini and the foreign exchange market to generate your monthly cash flow. And we've done this. Actually, we got it start. Building some of the things that we're doing as a result of the really severe market downturn in 2008. My parents were really close to being of retirement age and looking forward to retiring until they lost about 40% of the value in their 401k, and they were looking at now, instead of retiring next year, having to work an additional 10 years in order to earn back the lost value, the lost equity in their account. And so we really sat down and devised a plan for them that encompasses all of these tools. Pardon me. It encompasses all of these tools to be able to use and rebuild value in their 401k and their retirement plans, but also take some of the discretionary income that they have and not try to find those 10 to 12 to sometimes 15% winners in the stock market, but try to capitalize on price moves and try to make at least 50% return on most of their investments. And then to basically pay the bills to generate enough equity to be able to live off of while you're about to retire and have this investment, to generate cash flow, enough cash flow to pay the bills from our very short-term day trading effect. Because it's very unfortunate from an investing standpoint that you get to the end of your investment time period. You get to age 65 or 70 or however old it is that you want to retire. And at that point, when you have the most leverage and you start seeing the really sizable gains in your retirement portfolio, it's at that point that you start pulling out money and spending down the value. And so it's kind of the opposite of what you normally do as an investor. As your account grows, your investment winnings and earnings grow. But as a retirement approach, you start spending down your retirement account at exactly the point in time where you really start to earn sizable gains. And yes, they are using this particular approach. They're using both the mutual fund trader and the stock trader, and they're doing it themselves. And I've showed them how to do it, and I can show you exactly how to do it as well. That's one of the things we're going to look at today. But again, with this 25,000 foot overview, we have a number of different tools to achieve different investing strategies. We build long-term wealth through investing our retirement or IRA funds in a mutual fund trader. We also generate sizable gains through what I call medium-term investments. We'll hold these stock trades anywhere from 2 weeks to 6 months in the case of some of the Google trades that we made last year. And then we generate cash flow using the foreign exchange auto trading model, as well as the new E-mini auto trader that we just finished developing. Pardon me, I'll mute my mic on and off during today. In Texas, it was 70 degrees here yesterday, and tomorrow we have about an inch or two of snow on the way and 30-mile-an-hour winds. And so the weather's been doing really crazy things, and it makes me cough a little bit. So I'll try and be polite about that and not to cough in your ear. Let's talk first about, we're going to talk about the long-term investment and go progressively to the shorter-term investments that we're looking at. First, let's take a look at the mutual fund trader. And I'm going to pull up one of the funds that we have here. We analyze price information to determine when it's likely to go up. For example, if the price has gone up for each of the last 10 days, what do you expect it to do tomorrow? Well, if it's gone up for the last day or for the last 10 days every day, we have a pretty good expectation that it will go up tomorrow. And at some point, it will turn around and come down, and that's the point that we want to exit. But we have a system that looks at statistical price variations over time. Doesn't do any technical it doesn't do any fundamental type of analysis. It's all a technical approach that simply looks at a statistical treatment of price over times. It buys when we believe price is going to go up, and whenever the price reverses in a significant manner, we're going to sell it to preserve everything that we have looked at so far. So let's click over here and take a look at